Hi guys, today is April 20th and I'm making this video as a technical analysis. This is the futures chart. E-mini S&P is the leader of US indices basically. So the futures are a little bit weak and it's pointing with this one slow stochastics and a MACD is about to turn into a downside as a slow stochastic is also ready to move down, and it's already down 30 points on futures. So I'm pretty much sure if you guys never thought about futures, futures is the one who's like running the entire stock market and entire market in the US industry and everywhere basically. So please, just to just a quick disclaimer, whatever I say in this video is for the education purpose only. Please be what all the things whatever I say is my opinion. You don't need to take them. If you did take them, it's all up to your risk. Okay, you manage your own risk. I'm not telling you where to buy, where to sell, but this is just a financial education. It's not a financial advice. Just to let you guys know, these videos are for your financial education, not for your advice, not a financial advice. So please consult your financial advisor or a broker, whoever you take your advice from. We don't guarantee, or I don't guarantee, that you will going to make money out of this information. So yes, basically the futures are the one who's running entire US market. Everything is connected. Futures are connected to the oil market. It's connected to the forex market, bond market, everything. So basically the futures are looking weak to me, and based on the technical analysis, it's about to cross, MACD is about to cross, and the slow stochastic is already crossed. So I feel it's not sorry, excuse me, I don't feel, but I'm looking at the chart. Based on the chart, I feel it might go down. So but it all depends on the buyers. They can step in and they can take this up. So if you go and check the Dow Jones Transportation, this is a 1 year chart, and the Dow Jones Transportation is also looking a little bit weak to me. Let's go and check a little bit further down, and there you go. So yeah, it went to the sideways direction. Again, it does have a little bit of room to go up over here, no doubt. Dow Jones is also one of the Dow Jones Transportation is also one of our leaders. It might go pop up right over here, maybe, you know, like 1,000 points on Dow Jones, and maybe even on the futures it might pop up a little bit over here, no doubt. There are a lot of sellers over here, so it might pop up, but not, this is not a guaranteed one. But it all depends what the buyers are thinking about it, what the big banks are thinking about it. So there are a lot of sellers over here, no doubt about it. So yesterday's video I have told, like, I did not like what I see. This is the reason I did not like what I see. It was not going up. It's like fluctuating up and down, up and down. That means they are like filling up a lot of orders over here. That's what I mean. A lot of orders have been filled up. So one will going to happen: either the buyer step in, that will going to vacate this area. The seller step in, this will going to go down. So this area is right now is a very, very dangerous area right now. So as per the technical analysis, it's telling me it might drop, but again, this is just a technical analysis. You know, it might come up with the buyer steps in, they might take it on top. So let's check Tesla. Tesla is it comes with the earnings. I saw they dropped it very much, very big. So I think it was earnings, because it was, look, I saw it went to 160. So, and again, this is they took it up, but the investor pulled their money, I guess, after hour. So this is gold, and gold is also like the same. Hold on. Okay, gold. Okay, there you go. So gold has a this is a 9 months chart. Let's check 1 year chart. Let's check 2 years chart. Okay, gold has like almost like a double top right over here in this area, no doubt. And something is going on in this area. You see, like going up, coming down, going up, coming down, going up, coming down. Exactly, but looks like it might drop also, or it might take off. Let's see what happens. But this is the dangerous area, no doubt, because there are a lot of buyers and there are also sellers. So support and resistance. This is the resistance area on top, guys. This is the resistance area. So for the E-mini S&P is also like the same, but this is almost like a resistance area, and most smart traders are the one who's like moving out right over here. They're not even waiting to this area. Okay, that's what it is. They are not even waiting for this area. The hedge fund guys, no, they are not waiting for this. They are trying to move their money out right over here, so that way the regular traders, they think they are moving their money out right over here on top, but the smart people will going to move their money out, or they might buy this area and take off. This might take off. So that's what's going to happen. Let's just check Apple. Apple is kind of like strong. Apple, I like to see Apple every time. Do you know why I like to see Apple? Because Apple has been trading on S&P as well as in the Nasdaq area as well. So Apple is trading in both the side, in the S&P cash market also, and on the Nasdaq side as well. So S&P, the Apple is like one of the biggest leaders in our US industry, biggest company. So Apple is looking good, but it won't vacate this area. I don't think so. Whatever is showing, it might take some time for the Apple to turn around, but but what I'm still not calling for a crash, but I want you guys to watch this very, very carefully over here, because this can turn into a crash, a small crash, and later on follow up with a big crash. That's what happens most of the time. Let's check DAI, which is like a Dow Jones. Check 2 years. Still, it went in the sideways direction. Again, it's like a support, resistance over here, almost like a resistance area. No doubt, it might pop up a little bit here and there, but it might pop up here and there, but I don't see it's like moving and crossing this right now. I don't see that anymore, because all the technical indicators are up already. So I don't see that. You see this, when the market came down, the technical indicators also came down, and then it took off. But over here, the technical indicator came down, but it took off. But at the same time, the technical indicators came up also. So that tells lot of story. It's not showing any strength to move up. It's not showing any strength to move up. But at the same time, this is curving right now, and this is curving, which makes most of the buyers to step out and watch. Basically, a lot of people who are like smart guys, they are like stepping out and watching it. Exactly like the same thing for the E-mini S&P, but E-mini S&P is still showing. This is a 10 years chart. Oh, okay, I'm so sorry, guys. 2 years chart, and okay, so there you go. 2 years chart, 2 years chart, and it is also not showing any more strength. It came up ready to turn. That's what it is. It might pop a little bit here and there, no doubt. It might go up and maybe fill up this gap right over here a little bit. Okay, SPY, that this gap, you see this gap right over here, whatever I'm calling about it. So it might fill up that gap and turn down. That's what might happen. But this is again going up, going down, going up, going down, doesn't give a good signal. That means there are a lot of orders have been getting filled right over here. Again, this might turn down or this might turn up, but we have to sit on the sideline and watch very carefully. Dow Jones Industrial is like the one who's a leading indicators also. Dow Jones Industrial, Dow Jones, S&P 500, they are all leading indicators. And let me add one more, IWM, Russell, who's a leader as well. Okay, look at Russell. Russell is looking a little bit more better. Check the technical indicators. Russell is not more going downside, but Russell is not up also. I feel like this is a bear flag again. If you put a line, and this can be turned into a bear flag. Okay, let me show you something what I mean by bear flag. So this right over here, and you see this has turned into, like, I feel like it's a bearish flag. But let's see, we'll come to know as soon as the market breakdown in one or two next week probably. Let's see. Okay, but I feel like this is like getting ready to go downside, basically, Russell. Okay, and this is a daily chart again. This technical indicators will going to is by the day. So if tomorrow the market is down, it will going to go down. The E-mini S&P is already down 28 points. So that means if the sellers in the morning, they might come down more, and this bar can turn into a really big one tomorrow. So be very, very careful tomorrow. Gold again, if the market is going down, the gold might pop up a little bit here and there, no doubt about it, because the gold is like always on the opposite side of the economy and everything, like a Bitcoin. Again, Bitcoin is like the same thing. Bitcoin, a lot of people, they don't understand about the Bitcoin. They think like the Bitcoin is like a future currency and all. That's all fine, but my point is, like, like a lot of people, they think like okay, Bitcoin will going to go up and will going to make like 500 whatever they're talking about. Okay, but if the market goes down, Bitcoin has to follow, because there are a lot of ETFs right now in US indices where Bitcoin is a major part of it too. So if the market goes down, Bitcoin is also following it. Market goes up, Bitcoin is also going up. Otherwise, check. Bitcoin is down, market is down, Bitcoin is going up, market is going up. So not because of anything else, because there are a lot of ETFs in the market right now, a lot of them. So if the market is going down, that means the Bitcoin will going to come down also, because the investors might pull up their money. Only the Bitcoin will going to go up when the investors start putting the money back into the Bitcoin. And a lot of time, you remember, the Bitcoin went to 80, 70, 60,000, because that's the time where a lot of people were like pouring their money into Bitcoin, and that's the reason it went up. This is the Bitcoin futures chart. If you go and check on the Yahoo Finance, you might be able to see that on Yahoo Finance. Okay, so just letting you guys know, Bitcoin, if the US indices will come down, the Bitcoin will going to come down also. It won't wait at that level. It might come down. So Bitcoin is very, very volatile, no doubt. You see these bars, guys, very big bars. So it moves in a one day 1,000 to like 2,000 points. So again, Bitcoin is very, very hard to trade, no doubt. There are a lot of people who say like they are trading Bitcoin. They are not trading Bitcoin. They are just waiting the Bitcoin to go up. That's what it is. If they are trading, exactly, you can go and check my other videos. You'll see what is trading. So they don't trade like I do. Okay, they are just buying it and they are holding it. That's what it is. Buy and hold is not called trading. Again, so this is the Dow Jones DAI. So again, you see this is getting ready to go to the downside, basically. That's what I can say. Because it's all, or it will going to pop upside, no doubt. But most likely, it's coming to the downside, because it's ready. I feel like it's getting ready to go to the downside, and again, so this, you see these indicators, all of them, like it when they are up, that means the market is also, the market did not move up that much, but the indicators move up faster than the price. That means the more downside is coming. That's what I can tell you. The more and more downside is coming, that's what's going to happen. So yes, please be careful about this. I don't like what I see so far. I will change my technical analysis when I see if the S&P move up and up, like ready to move up. Okay, but still there's still some room for S&P to move up, no doubt, right over here, to fill up that gap for SPY. It might move up a little bit here and there, but I don't see it's going and hitting this high, all-time high. I don't see that anymore, because the Fed and everything counts. If the Fed increase the interest rate, the S&P might go down a little bit more down. So if the housing number doesn't come out good, the S&P might come down. Home Depot will going to have an effect. Lowe's going to have an effect. So a lot of things will going to go into the prospect when the housing numbers come up. So unemployment is still, if the unemployment number come down, the stock market will going to come down also. So if the oil is oil ETF is CL, crude oil CL. There you go. Futures in the crude. Okay, there you go. What does it show you guys? Has jumped. You see this? There's a gap. And what really happened after the gap? The gap is trying to fill up. The price came down. The price came down. Price is coming down. What happened to the MACD? Turning around. What happened to the slow stochastics? Turning around. So the oil is coming down. E-mini S&P is coming, might follow also, because it's one of the leading. If the oil going down, that means it has to recalculate everything, all the price again. So E-mini S&P, I don't think so that it wants to trade at this price anymore. It will going to move downside, or it will going to move upside. But most likely I can say like 70 to 80% it will going to move downside. That's what I'm projecting for it. Most likely it to come down, not to go up. I don't see the price is going up anymore, because the price, I feel like, it's coming down. So again, the Russell is one of our indicators. The slow, or all the small caps. The Russell is the one who's an indicator, who tells us a lot of story too. So Russell T. Russell futures, TRS. I forgot the Russell futures. Let me check. Hold on, guys. The Russell futures are also very, very big player in our market, no doubt about it. RTY. Russell futures are one of the leading indicators of our market. And guess what? Again, Russell futures are pointing to the downside, guys. Again, these are the major players. Oil is pointing to the downside. Russell futures are pointing to the downside. This is like a big bearish flag to me. And oil wants to fill up this gap, no doubt. And again, E-mini S&P is looking very weak to me. It's going to the downside. So Tesla is already down. I saw it after hour. So gold is like looking to break upside, no doubt. Okay, it might break upside, or it might come downside. But gold, this is the gold ETF. Just to let you guys know, this is not the gold futures. I can open up the gold futures also. But what I'm trying to say, like is it might pop up a little bit here and there, no doubt. Bitcoin, guys, check this out. Check this out, guys. So look for the technical indicators. It is ready to move down. Apple is the one who's like looking good, but it's very likely the Apple will going to come up. It has to follow the leaders. If the this is the these are the leaders, no doubt. If the leaders are going down, every other player has to go down also. That's what it is. That's what happens every single time. Okay, it's not like the even S&P will going to go down and the Apple will going to go up. It has to follow the leader. If one of those leaders having a crack, they will going to have a crack. Everyone will going to follow the crack. That's how it is. So all these leaders looks to me they are very very weak, and 80% I'm calling on the downside. 80%, 20%, unless the buyers they step in, that's most likely not going to happen. But I can be wrong again. I can be totally wrong, but the chart doesn't tell me that market wants to go up again. This can be a big bear flag. This can be a big bear flag from here to here, and he turned this, and this can be very very big bear flag. So I don't see this market like popping up the way it used to pop. So no, I don't see that anymore. So please, if you are holding any type of a stock at this point, I feel it will be good for you to plan out something called SQQQ. Buy some SQQ. Okay, buy some SQQ, which is like a opposite direction of every market. Okay, which will going to be a very good one. Or you can buy something called VIX. VIX is another one which is like an indicator for the market. When the market is going down, VXX is a good one basically, which is a S&P 500. Okay, if the market is going down, that means the VIX will going to pop like crazy, no doubt. That's the fear index. If you having a stocks or something like that and you don't know how to protect your profit, I want basically, if I were you, I would love to buy some of the VIX right now, and it's like all time low right now, guys. All time low. So you see the VIX is also like showing a little bit on the downside, but it might go a little bit here, and it will gonna pop. It will gonna pop very very soon. It will gonna pop, no doubt. So again, so if you are an investor or you are like holding some of your things, you should be buying something called VIX or QQQ right now. And this is the moment for you to balance some of your money right over here, because it's like how you need to understand this, like it's like an insurance policy. VIX is like almost like an insurance policy. That's what you have to consider this. If the market goes down, VIX will going to pop up. That will going to save you some money. Okay, save you some money. When VIX goes up, you can sell it and take your profit and buy again your stocks, whatever you buying it with that money. Make a dollar moving average. That's, if I were you, that's what I'm going to do. I'm not going to buy any more of Apple, any more of Amazon. I'm going to buy VIX and I'm going to hold it. When the market have a crack, this VIX will going to go up, and when it goes to like 50 to like $60, I'm going to exit this VIX position here, guys. And you can stack up some money right over here. When it goes to like 50 like to $55, I'm going to exit my VIX position, and then that money I can buy again the dips in the Apple or any type of a stock, whatever you are holding it. That's what it is. That's what I'm going to do. If I were you guys or any type of an investor, that what you need to do it also. Basically, at this point, just stack up some money onto the downside for the weeks. I mean, like, don't stack up some money. I mean, like, some people, they don't want to take their Apple position off or something like that. No problem. So this time you should be buying wicks and hold some wicks, wicks little bit, and when the wicks pop up, sell it and buy again more of your Apple. Make a like a dollar moving average. Basically, that's what it is. So again, guys, please do your own research. This is just a education video for you guys. I'm not claiming or I'm not telling you what to do, but this is what I'm going to do. Okay, so if I were you, this is what I'm looking at also. These are my old charts back in time. So you see how I used to draw the trend lines and all, but I don't do that anymore because I don't go to see, I don't do any more long term investment. I do very very short term. I'm a day trader and I'm an option trader, so whatever is moving, I'm taking the moves. Basically, that's what it is. Whatever is moving in the market right now, I'm going to get in and get out very very quickly. Back in time, I used to hold the options for like a week, for a month also. I don't do those things anymore. So I have totally shift my views about the market. And again, this is like a little bit of like a short term to like a long term targets. Basically, the short term targets, I'm looking for like a market to go down. Long term target, the market will going to go up no matter what. Okay, this is just whatever I said in this video is just a short term target because that's what I'm looking at. Because until unless this fundamentals and technical change and tells me some other story, then I can tell you, okay, you know what, guys, this will going to go up. I don't see that this is ready to go up anymore. So I see this is coming down. The price is coming down. The price is coming down. So over here they have filled up a lot of orders, no doubt. Until unless there are the big banks, JP Morgan, Goldman Sachs, if they step in, they can take this up, no doubt. They can, because they are the one who's like moving 15 to 20 billion dollars every day from the market. So it's more likely my money, it's your money, is the S&P doesn't move with your money and my money. That's what I can tell you. The S&P hardly moves with our money. Only the big banks can move that. Yeah, if the big banks are not moving their money that day, you're going to see a swing day. That's what happens, swing day. Like it just go up, comes down, and settle where the price is. Basically, the price has started and it might come exactly where they have closed the price also. So it might have a swing day, but I don't see any swing days coming up right now. But I can see the step might come down. 80% chances, I can tell you, 80% chances, I can tell you, the E-mini S&P is dropping because it's not showing me any strength right now. I don't see any strength in E-mini S&P. So be very very cautious about trading for tomorrow, guys. Alright guys, thank you very much, and always thank you for tuning into my videos. Please subscribe, like, and share this video to your friends and family. Don't forget to subscribe, please. And please, whatever I say in this video is for the education purpose only. Okay, always stay please, and always stay in bless as always. Bye.